Hello, good morning, ladies and gentlemen. How are you all doing this morning? And trust you had a wonderful weekend. And I hope you're preparing for the new week. And that is why we are here this morning so that we can get ourselves prepared, position ourselves in such a way that we can catch that potential move during the course of the week. And first of all, before we kickstart the live session, I would like to congratulate everyone who had been part of our profitable journey during the course of last week, as we were able to scoop, except for the pound sterling USD, we were able to scoop a significant amount of pips as regards profits during the course of last week. So well done to everyone who had been on standby to catch those opportunities during the course of the previous week. And now we are heading right into the new week, and we are going to be having a fresh new perspective at the market as we try as much as possible to position ourselves in such a way that we can catch any potential opportunity. In fact, since in the last 6 to 7 hours since the beginning of this week, we have seen how the dollar had stayed on the back foot, as majority participants in this market are still all attentions are focused on the headlines surrounding the debt limit negotiation, which is according to Joe Biden yesterday, we might be seeing something positive this morning. So everyone is definitely looking forward to that event. And the market is a little bit risk averse surrounding the US dollar. So we are going to be looking at this in detail and how we intend to position ourselves. And for those who are joining us for the first time, what I simply do here is to analyze and do a follow-up detail on my publication during the course of the weekend. And there is a little turn to how I've been publishing my forecast for the week, as this weekend, instead of the normal videos I do as regards the publication for the new week, what I do now is I did during the course of the weekend was a live forecast, which I think we had a bunch of people around as we did that forecast. And the link to that forecast is right in the description box of this current video. So you might want to watch that video to see how we got to the point that we are going to be deliberating on today. So with that being said here, let's dive right into the business for today. And the first thing we are going to be doing this morning, as usual, you know how we do it. We want to keep tabs with the fundamentals and see if we do have any high impact event that we are going to be looking forward to today. And from the look of things right here, this is my economic calendar. So like I said, I always use the FX Street. And on the economic calendar here, there are no high impact macroeconomic event for Monday, May 22, except for the feature coming from the Chinese docket, which is not part of the instrument that we are going to be monitoring for the week. So in that regard, what I will do right now, like I always tell you, that once I have checked the calendar and there are no high impact event, the next thing I want to do is to filter out and include the medium impact event, which is what I'm going to be doing right now. So let's see if we are going to be having any features from the economies that we are looking at. So from the US docket, we have a handful of speeches coming in from Fed banking, which is coming up in about 5-6 hours from now. And banking is the president and CEO of the Federal Reserve Bank of Richmond. So he's going to be having a speech in about 5-6 hours from now. Then we also have Bostic, who is also going to be having a speech at the same time. And he is the Federal Reserve Bank of Atlanta. He is the president of the Federal Reserve Bank of Atlanta. And then we also have Daly's speech, which he is the Federal Reserve Bank for San Francisco. So we are going to be looking forward to this event. At least it will give us an insight into the monetary policy of the US economy and what is likely going to be happening in the nearest future. So with that being said here, let's dive right into the chart and let's use our technical skills to identify potential trading opportunities ahead of the new week. So as usual, the first commodity we are going to be looking at this morning is the US oil spot. And on the US oil spot, let's look at what has been happening on the 4 hours time frame. Let's start from the 4 hours time frame. Let's have an holistic point of view of what is really going on here. And on the 4 hours time frame, this is what we talked about during the live session on yesterday. And we acknowledge the fact that price action has been bearish in this market, and to further emphasize the strength of the sellers here, what we did was to connect a series of lower highs since the beginning of since the mid-month of April. And in fact, we have a couple of trend line here which emphasize the level of seller strength in this market. And you can see we have a trend line. Price has consistently found lower highs. But there is one interesting thing that happened during the beginning of this month. We saw here that as soon as price action tested that area around the $67.35 level, we saw a huge bullish engulfing candle rejecting that zone. And since then, price action had continued to find higher lows. And from a technical standpoint, whenever we cite higher lows like this, it's a sign that buyers are gradually gaining momentum behind the scenes. But one thing about this structure is the fact that despite the fact that we are having higher lows, we are yet to see price action find higher highs. As you can see here, as soon as price gets into that $74 area, we saw how sellers took over the market, negating all attempt by the buyers to break out of that structure. And because of this, we need to be very, very careful at this current point in the market. Now, with this whole situation we have here, and if you look closely, you will see how price action has been trapped within a range, a $4 range between the $74 level and the $70 level here. And one thing I can't ignore at this juncture in the market is the fact that price action had continued to find higher lows in this market since the beginning of this month, which is a sign that buyers are trying to negate all sellers' attempt. And we saw some bullish traction which happened during the previous week, which we also took advantage of actually, but it never lasted long. As we saw here during the last week, we saw how sellers negated all these bullish attempts around this area, which also shares a confluence with that trend line we identified earlier. So we still need a key structure here that will guide our trading activity for this week. And as a result of that, I was able to identify a key level at the $71.50 level. And if you go to as far back as the last week, Tuesday, you will see how that level had been a major determinant of price action. So as soon as price action gets to that area, we have seen at times we see buy pressure come in, and at times we saw our sellers use that platform to push price to the downside. So let me show you what I mean here. So look at what happened last week. We saw sellers around this area. Then we saw buyers came in here. We saw another bullish attempt around this area, a sharp rejection. Then we saw price action break down, retest the structure a couple of times. And hold on a second. I think I just... I'm so sorry for the break in transmission. I had some power outage, so I had to do some changeover, and things are quite good now. So let's go back into where we were. So we were talking about how we are going to be taking advantage. We are talking about how important the $71.50 level is based on this current structure. And I was showing you how that level had been a major determinant of price action in the last, since the beginning of this month, actually. And because of that area at this point, we are going to be using that level as our key level for the week, which definitely is going to be serving as our yardstick to guide trading activity for this week. And you know, when we have key levels like this, what we want to be using the key level to do is to help us position ourselves. Now, if price action at any point in time climbs above the $71.50 level and we continue to see buy pressure above that structure, at this point I will consider buying the US oil spot, leading to the breakout of that trend line. Further will also confirm the strength of the buyers, and we shall be hoping that price action will be breaking out of that $74 level at least for the first time in the last couple of weeks. So that is how we are going to be looking out for buying opportunities around this area. And to sell the US oil spot for this week, the only thing I would like to see here is price action breaking down that trend line, coming right below the key level at the $71.50 level. Then we continue to look out for selling pressure below the structure so that we can be part of a bearish move to the downside. So in order to have a better perspective into what is going on here, so what I did this morning was to look at what is really going on around that $71.50 level. We want to see how participants in this market will be reacting or has been reacting to that area since the beginning of the week. And in order to have an idea of what is going on there, we will need to scale down into the 1 hour time frame. And I was able to share an update this morning around I think about 30 minutes ago. Let me show you quickly what was shared on my TradingView platform this morning, and the same thing happened on my Telegram platform. So I shared this update here where I made mention here that the week has started on a bearish note, but price remains within a range. I think that was a typographical error there. So price remains within a range and waiting patiently for signals to happen. So we have a range already. So we are waiting patiently for signals to happen. So let's go back into the live chat and see what we are talking about here. So you can see price is currently ranging just right around that $71.50 level, as you can see here. And we have the resistance line at the $71.85 level. That was where price action started this week. We saw it drop to the downside. But as soon as it got into the $70.65 area, we saw a bullish traction coming from that area, giving us an engulfing bullish candle to signal the presence of buyers around that area. And you all know how we do it whenever we have this kind of simple setup like a flat channel like this. The next thing we want to be doing is to wait patiently for price action to either break out of the resistance line for buying opportunity or break down the support line for selling opportunities. So in that regard, since we are waiting for price action to either break out or break down, then we are going to be having a buy stop order above the $71.85 level to take part with that bullish momentum if price action ever breaks out of that structure. And if it so happens that price action drops below the $70.65 area, then we want to have a sell stop order below that area so that we can capture that move if price action will be going to the downside. So this is what I'm going to be looking out for today on the US oil spot. So I'll advise that we be on standby to catch any of this opportunity as price action is being monitored. Be rest assured that I will be with you in the comment section of both my TradingView and Telegram platform as we continue to monitor price action and at the same time get ready to take advantage of an opportunity. So that is that on the US oil spot. If you have any questions, feel free to let me know right in the comment section. So moving on right now, we are going to be moving on to the next pair, which is the GBPUSD. And in fact, we have seen price action do a significant bearish move this morning. So let's quickly run through what my updates are. As at this morning, I already shared an update here. So let's see what we have here. So this is what I shared this morning on the GBPUSD. So I said here that the week has started on a bearish note, hereby breaking down our key level at the 1.24500 area. So if you had watched my live session yesterday, like I told you earlier, the link is in the description box of this current video. So you might want to watch it so that you can have a background knowledge of how we got to this point that we are deliberating on. So we had a key level at the 1.245, which was supposed to be serving as our yardstick for trading activity this week. And we all know how we use our key level. Our key level helps us to identify if we are going to be selling or buying. So if price action remains above our key level, we look out for buying opportunity. And if price action remains below our key level, we look out for selling opportunity. And from what happened this morning, we saw how price action significantly broke down that key level. And at this point, we need to start considering selling the GBPUSD if price action remains below that area. So what I said here is that we are going to be waiting for a retest of structure. That is, if you had missed out on the breakdown of that structure, we want to see price retest that structure, give us some signals that sellers are gradually gaining momentum on our lower time frame, after which we can be part of the bearish move to the downside. So going back into the line chart right now, so we have the simple setup here finally figured out. So we have our resistance line at the 1.24720, and if you see what happened here on Friday of last week's trading session, we saw how that level also was sharply rejected by the sellers. And it appears this is continuing this morning as we saw another sharp rejection of that level, giving us a clue into how strong the sellers are at this particular point in the market. And with this whole situation here, it's looking very, very bearish at this point. And since we already have the breakdown of our support line, which also shares a confluence with our key level at the 1.245, it appears we have a bearish signal at this point. So if you had missed out on that breakdown of structure, what am I going to be advising us to do right now is to see if price action will be doing a retest of the structure. So we want to see something like, following the breakdown of the structure, we want to see price do a retest of that level, selling pressure on our lower time frame, giving us a confirmation that sellers are gradually gaining momentum. Then we could join that decline to the downside. So this is how we are going to be selling the GBPUSD for today. So let's see if the market will give us a second chance to be part of this move. And how far that momentum will go depends on how price action will be reacting to that 1.23900 area, which we identified here. So if price breaks down that structure, definitely we have no other choice than to look out for more opportunities to add to our existing position. But if price action gets into the 1.239 and we begin to see what's it called, buying pressure resume around that area, then we want to be anticipating another wave of bullish momentum. So this is the only thing we are going to be looking for to sell the GBPUSD today. And if there are any new setup that comes up, trust me, I'm going to be giving you an update in the comment sections of both my TradingView and Telegram platform. Now, in as much as we are looking out for selling opportunities, we also want to consider the potentials that the buyers have in this market. So we already said earlier that if price action gets into the 1.239 and we start seeing buy pressure, this could welcome buying opportunity. But what happens if price action does not get into that area and instead we start seeing reversal pattern forming somewhere around this area? Then we want to be on standby to catch that move even before the breakout of that resistant line at the 1.24720 happens. I will be giving you an update. Let's monitor how price action reacts to the current market structure, which could take about 2 to 3 hours before some maturity comes in here before we can take advantage of any move. So if you do have any questions, feel free to let me know right in the comment section. So that is that on the GBPUSD. So I will be moving on to the next pair. The next pair we are going to be looking at this morning is the XAUUSD. So on the XAUUSD, I already shared a commentary this morning. So let's quickly run through what the commentary is before we go back into the live chat to do some expansion on what we what I talked about here. So it's a very short commentary. So I said here that price action continues to oscillate around our key level at the 1,980 zone, waiting patiently for a signal. And remember, if you had watched my video on the during the live session we had yesterday, the link to that video is right in the description box, so you might want to watch it so that you can have a background knowledge of how we got to this current point. So we agreed in the video that we are going to be having our key level sitting at the 1,980, which is going to be serving as our yardstick for trading activity this week. And what we saw this morning is quite interesting. We saw how sellers took over this market. Price action started at around the $1,982.35 level. As you can see here, price action dropped significantly to the downside, and as soon as price got into the $1,971.50 level, we begin to see a buy pressure resume around that area, giving us a situation where price action is currently caught within a range between the $1,982.35 level and the $1,971.50 level, giving us an indecision phase right now. And you all know how we do it here. Whenever we have this kind of indecision phase, we want to remain very, very patient, waiting for price action to give us a signal to trade. And this signal will come either in the form of a breakout of the resistance line at the $1,982.35 level, or the breakdown of the $1,971.50 level to take advantage of a selling opportunity or buying opportunity, whichever case it may be. So at this point in time, our center of focus is around this range, and to further help us to capture this move when price action either break out of structures, we are having a buy stop order sitting above the $1,982.35 level. This is the highest point price action has been this week, and there has been a strong selling niche since Friday of last week trading session. So if a breakout of that structure happens, price action is likely going to be taking out all the sell positions there, giving us some liquidity for buying momentum from that area. So let's be on standby to catch that opportunity if price action ever breaks out of that level. And you know how we do it here. Whenever we have a bias, we also want to take into consideration the potential of the opposite direction too as well. In as much as we are looking out for buying opportunities in this market at the breakout of the resistance line, we cannot ignore the potentials of the sellers too as well. And in fact, if we consider what has been happening since last week or in the last couple of weeks, you would agree with me that price action has been very, very bearish in this market. And one thing that also will let us consider the selling momentum in this market is the fact that that area around the $1,982.35 level has been a strong selling niche. In fact, since the last trading day of last week, we saw how that level buyers were unable to break out of that structure throughout the later part of last week trading session to give us a signal that sellers are very, very strong around that area. And if that is going to be the case, then we also want to consider selling the XAUUSD just in case the market presents to us. Now, the question at this point is, what do we want to see on this chart that will make us change our bias from bullish to bearish? Well, the only thing we are going to be looking out for to sell the XAUUSD today is to see price action break down the $1,971.50 level. Remember, this is the lowest point price action has been for this week, and we saw how buy pressure resumed from that area to negate the selling pressure from that level. So if price action takes out the sell positions there, then we are likely going to be considering selling the XAUUSD for today. So let's be on standby to catch this opportunity too as well. And in that regard, I have a sell stop order placed right below that structure to capture that move if price action ever drops to the downside. Then one more thing I would like to add here. After looking at this current consolidation phase since last week Friday, I can see that we have a lower high, a series of lower highs. So we want to connect that level and use it as a parameter to guide our trading activity for today. So we have a trend line figured out, a bearish trend line. So I will thicken this a little bit so that we can see things more clearly. So as long as price action remains below that trend line, we will feel comfortable in our sell position. So I want to see price break down the structure, and price could still come back to retest this level. As long as it remains below the trend line, we feel comfortable in that sell position. However, if price breaks out of the trend line at any point in time to the upside, we start seeing retest of structure, buying pressure right on our lower time frame, we could actually take advantage of that bullish momentum even before the breakout of the 1982 happens, where we already have a buy stop order to take advantage of that bullish momentum if it ever happens. So this is what we are going to be looking at, but trust me, if there are any updates, I will definitely be giving you an update on my public platform, both on the TradingView and Telegram platform as at when due. If you do have any questions regarding what I just explained so far, feel free to let me know in the comment section, and trust me, I am willing to be of help in that regard. So with that being said, here I will be moving on to the last pair we are going to be taking for today, which is the USDJPY. The USDJPY was one of our most profitable trade last week, as we were able to scoop over 800 pips as we had multiple entries on that instrument for last week. And let's see if we can replicate what we did last week on the USDJPY. So right here on the 1 hour time frame, we have a simple setup. So during the course of the weekend, I shared with you how I broke down from the daily time frame to the 4 hours time frame, how we are going to be positioning ourselves ahead of the week. And as a result of that analysis, we were able to come up with a key level that we are going to be using to guide our trading activity for the week. And the key level falls exactly along the 137.800 area, which was identified in that video. If you had not watched it, please, you can do so. The link to that video is right in the description box of this current video, so that you can have a background knowledge of what we are talking about here, as we're only going to be focusing on the lower time frame during the live session at this point. So you can see what has been happening since the beginning of this week. We can see how price action has been consolidating just right around that key level at the 137.800 area, further emphasizing how important this level is. And to further buttress this, we have a consolidation phase right now, where price action is trapped within a range between the 138.00 and the 137.500 area. And you know how we do it here. Whenever we have a simple flat channel like this, we want to remain very patient, waiting for price action to give us a signal, which is likely going to come either in the form of a breakout of the resistance line or the breakdown of the support line for trading opportunity. And for the sake of clarity here, I would like to show us the higher time frame so that we can see things from an holistic point of view, how it is looking like, and so that we can correlate the structures we have on the higher time frame with what we have on the lower time frame. So if we look at the 4 hours time frame, this is what we saw during our live session yesterday. We saw this simple setup here where price action transitioned into a double bottom structure. As you can see here, we had at the 134.00 area, we saw that price was unable to break the previous low, which is a very beautiful sign that buyers are gradually gaining momentum. And we had our neckline sitting at the 135.250, and we saw our price action broke out of that structure. So in fact, what was a very profitable week for us last week, as we rode the move all the way into the 138.750. And with the situation of things during the later part of last week, I think Thursday and Friday of last week trading session, we saw how price action was caught within a range between the 138.750 and the 137.800 area, which happens to be our key level for this week. And price action broke down that bullish trend line that we had here. You can see we had a bullish trend line, breaking down that bullish trend line on Friday, which happens to be the first time price action will break down that structure throughout the course of last week, which from a technical standpoint is a sign that sellers might likely be coming in around that area. And followed with a choppy situation around that key level, it is very clear that we are at a critical level here, where anything could actually happen. So we are anticipating either breakdown of the structure or price action climb up to break out of the 138.750. So I wanted to show you how important this structure is so that we can also use it to leverage ourselves on the much more lower time frame. So going back into the 1 hour time frame, how do we intend to take advantage of a trading opportunity around this market structure? So we are looking forward to price action either breaking down the support line or breaking above the resistance line at this point. So to help us catch that move, we have a buy stop order just right above the 138.00 level here, and we also have a sell stop order below the 137.500 area to capture that move to the downside. So let's see how price action plays out from this current structure. It will take probably like 2 to 3 hours before something comes in around this area. So let's remain patient, wait for price action to give us that signal, which is likely going to come in the form of a breakout or breakdown of this channel. So that is that we are looking forward to today. But rest assured, I will be with you right in the comment section on both my TradingView and Telegram platform as we continue to monitor price action. Do have a wonderful day, everyone. Bye-bye.